Let's dive into Volvo's rough August. It's been a challenging month for the iconic Swedish automaker, known for its commitment to safety and innovation. But even the most resilient brands face hurdles. Volvo is known for safety and reliability, but even the strongest brands hit bumps. This August, Volvo experienced a significant downturn in sales, a stark contrast to its usual steady performance. The dip was enough to catch the attention of industry analysts and car enthusiasts alike. This past August, Volvo's sales took a noticeable dip, enough to get the whole industry's attention. Dealerships saw fewer customers, and showrooms were unusually quiet. This wasn't just a minor fluctuation, it was a clear signal that something was amiss. A single month's drop might not seem huge, but in the car world, it can signal bigger shifts in what buyers want and how the economy's doing. For Volvo, this decline raised red flags about consumer confidence and market trends. For Volvo, this wasn't a minor slip. It was a real slump that has people asking questions. Industry experts are now debating the reasons behind this downturn. Was it due to economic pressures, changing consumer preferences, or perhaps issues within Volvo's own strategy? We'll break down the numbers, look at what's driving the downturn, and see what it means for Volvo and the car industry as a whole. By analyzing sales data and market trends, we can get a clearer picture of the challenges Volvo is facing. From electric cars to economic pressures, we'll piece together the puzzle. The rise of electric vehicles and fluctuating fuel prices are just a few factors that could be influencing consumer behavior and impacting Volvo's sales. By the end, you'll know why Volvo hit this rough patch and what it might take to get back on track. We'll explore potential strategies Volvo could adopt to regain its footing and continue its legacy of safety and innovation. Let's get started. Time for the numbers. In August 2025, Volvo sold 48,029 cars worldwide, a 9% drop from last year. That's not a blip, it's a wake-up call. Fewer people drove home in a new Volvo, and that affects everyone from factory workers to dealership staff. This 9% drop is more than a statistic. It's thousands of unsold cars and a sign of shifting demand. Volvo now has to dig deep. Which regions, models, or customer groups are behind the slump? The headline is clear. Demand is down, and it's time for Volvo to figure out why. This number sets the stage for everything else we'll discuss. The investigation starts here. Keep that 9% in mind as we move forward. Now let's dig a little deeper into the numbers that really matter. Electric and hybrid sales. This is where the story takes a turn and the data gets especially interesting. For years, Volvo has been positioning itself as a leader in the shift toward electrification, investing heavily in both fully electric and plug-in hybrid vehicles. But the latest sales figures reveal some unexpected challenges that could reshape the company's future plans. In August, Volvo's fully electric cars experienced a dramatic 28% drop in sales compared to the same month last year. That's not just a small dip, it's a significant decline that's raising eyebrows across the industry. For a brand that's been so vocal about its commitment to going all electric, this kind of setback is hard to ignore. This drop is much steeper than the overall decline in Volvo's sales, and it signals a potential roadblock for a company that's betting big on an all-electric future. It's a wake-up call, not just for Volvo, but for the entire automotive sector watching the EV transition unfold. Even though fully electric cars still made up about 20% of Volvo's total sales, that sharp drop is a red flag. It suggests that consumer demand for these vehicles may not be as strong or as steady as many had hoped, at least for now. Plug-in hybrids, which are often seen as a bridge between traditional gasoline cars and full electrics, didn't fare much better. These in-between models also struggled to attract buyers, despite offering the flexibility of both electric and gas power. When you combine the numbers for both fully electric and plug-in hybrid vehicles, sales for Volvo's electrified lineup fell by 17%. That's a substantial drop, especially considering how much of Volvo's recent marketing and product development has focused on these models. Nearly half of all Volvos sold are now electrified in some way, so this slowdown isn't just a blip, it's a serious concern. It raises important questions about whether the market is ready to embrace electrification at the pace automakers have been hoping for. The market for cars with a plug was supposed to be booming, with experts predicting rapid growth and widespread adoption. But the numbers from August tell a very different story, one of hesitation, uncertainty, and perhaps even consumer fatigue. It's clear now that the road to an all-electric future is bumpier and more unpredictable than many expected. There are obstacles, ranging from high prices and limited charging infrastructure to shifting consumer preferences that are slowing down the transition. For Volvo, this means it's time to take a hard look at its strategy. The company will need to adapt, rethink its approach, and find new ways to win over customers who may be on the fence about going electric. The EV slowdown is real, and it's hitting hard. Dealers and sales teams are feeling the pressure, and the company's ambitious goals are suddenly looking a lot more challenging. So what's really behind this surprising shift? Let's take a closer look at the factors driving the slowdown and what it could mean for Volvo's future. When you think of Volvo, the first images that come to mind are probably crisp Scandinavian roads, sleek cars gliding through snowy landscapes, and a reputation for safety, smart design, and reliability. For decades, Volvo has been synonymous with Swedish values, practicality, innovation, and a deep commitment to protecting drivers and passengers alike. But there's more to Volvo's story than meets the eye. Founded in 1927 in the port city of Gothenburg, Volvo started as a small Swedish car maker with big ambitions. Over the decades, it built a reputation for making some of the safest and most durable vehicles on the road. Volvo's heart has always been in Sweden, but its journey quickly became global as its cars found fans from Europe to North America and beyond. In 2010, a major turning point arrived when Chinese automaker Geely acquired Volvo from Ford. This move surprised many in the industry. Suddenly, a brand so closely tied to Swedish identity was under Chinese ownership. People wondered, would Volvo lose its soul, or would this be a new chapter of growth? Some worried this would change Volvo's DNA, but Geely took a hands-off approach, allowing Volvo to remain true to its roots. Instead of meddling, Geely invested heavily in new models, cutting-edge technology, and electric vehicles. The result? Volvo's lineup became more modern and competitive than ever, while still holding on to its core values of safety and Scandinavian design. This partnership gave Volvo the financial muscle and global reach it needed to compete with luxury giants like BMW and Mercedes-Benz. It also opened the doors to the massive Chinese market, where Volvo quickly became a symbol of premium quality and international flair. Today, Volvo is a unique blend of Swedish engineering and Chinese investment. Its cars are designed in Sweden, but many are built in China, and its workforce is a mix of Swedish and Chinese talent. This fusion has made Volvo a truly global brand, with a foot in both East and West. This global reach is a strength, giving Volvo access to new markets and ideas. But it also means the company is more exposed to the ups and downs of international politics, trade tensions, and shifting consumer trends. In today's complicated world, this unique mix of Swedish heritage and Chinese backing brings both exciting opportunities and real challenges. Volvo must constantly balance its identity, innovation, and global ambitions. Understanding Volvo's complex identity, rooted in Sweden, powered by China, helps explain why the company faces unique struggles in today's fast-changing auto industry. So, how does this global setup play into Volvo's recent troubles? Let's take a closer look at the challenges and opportunities that come with being a truly international brand. Volvo isn't alone. Every carmaker is feeling the heat. Demand is unpredictable, making it tough to plan production. Build too many cars and they sit unsold. Build too few and you lose customers. Consumer confidence is shaky. People are worried about jobs and rising costs, so they're holding off on big purchases. New tariffs and taxes are making cars pricier to build and buy. The result? A perfect storm of uncertainty, risk, and shrinking sales. Even the best brands can't escape these global headwinds. The car business is more challenging than ever. Volvo's struggles are part of a much bigger story. Let's dig into why buyers are hesitating. Why are buyers holding back? Economic anxiety is front and center. Rising costs for essentials make a new car feel like a luxury. It's not just the sticker price. Insurance, maintenance, and fuel or electricity all add up. New taxes and tariffs can push cars out of reach for many. Plus, buyers are caught between old and new tech, unsure about going electric, but hesitant to buy gas cars that might soon be outdated. This uncertainty leads to wait-and-see paralysis. All these factors combine to create a tough climate for car sales. It's not just about Volvo, it's about the whole industry. Let's look at how the electric dream is facing new challenges. The electric revolution isn't moving as fast as expected. Volvo's 28% drop in EV sales shows the initial excitement is fading. Early adopters have bought in, but now the average buyer has questions about range, charging, and cost. Range anxiety and charging infrastructure are still big concerns. EVs cost more upfront, and in tough times, that's a deal-breaker for many. Even hybrids are slowing down. Volvo's electrified sales fell 17%. Buyers are confused or cautious, waiting for the next big leap. Volvo, betting big on electric, now faces a skeptical market. The challenge: convince mainstream buyers that EVs are worth it. The electric dream just hit a speed bump. Sales drops hit Volvo's bottom line hard. Even before August, profits were already falling. Lower sales and higher costs from tariffs and weak demand squeeze profits. Less profit means less money for new models and tech. Volvo faces tough choices: cut costs, delay projects, or offer discounts that eat into margins. It's a balancing act. Sell fewer cars at higher profit or more cars at lower profit? Every decision is tougher when the wallet's tight. The financial pressure is real and growing. Volvo's leadership has to navigate the storm carefully. The next moves will be critical. So what's next for Volvo? The road ahead is tough. Economic worries and EV skepticism won't vanish overnight. Volvo can't just wait and hope, they need to act. That means rethinking their EV strategy, addressing buyer concerns, and maybe adjusting prices. Their reputation for safety and quality is a huge asset. Now's the time to remind buyers why they trust Volvo. Leaning into core strengths could help win back cautious customers. Adaptability is key. Can Volvo offer the right mix of cars and manage costs wisely? The company has reinvented itself before. August was rough, but it's too soon to count Volvo out. The next chapter will show if this iconic brand can steer back to growth.